Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 15th of July 2018 and we're providing our gold and silver weekly update for the week ending the 13th of July. Gold fell $14 last week from $1,255 to $1,241, having hit a high of $1,265 and a low of $1,238. In sterling terms, gold finished the week at £937. That's down £7. And in euros, it closed at €1,062. That's down €6 on the week. Silver fell 22 cents, from $16.04 to $15.82, having hit a high of $16.21 and a low of $15.76. In sterling terms, it closed at £11.95. That's down 12 pence. And in euros, it closed at 13.54 euros. That's down 0.12 euros. The gold to silver ratio rose from 78.24 to 1 to 78.44 to 1. The Dow Jones closed on Friday at 25,019, up 94 points on the day and up 563 points on the week. And the NASDAQ closed at 7,825, up 2 points on the day and up 137 points on the week. Brent crude fell $1.78 from $77.11 to $75.33. And US light crude fell $2.79 from $73.80 to $71.01. The dollar index stands at 94.67. That's up 0.71 on the week. Gold markets initially opened higher last week, peaking on Monday and then slowly descended throughout the week. The strong dollar was caused by robust UK producer and consumer inflation reports and an increased demand for dollars as a safe haven asset because of the threat of additional tariffs on China by the United States. Now, before we discuss gold further, what happened this past week is what could prove quite indicative in the future. And all precious metal buyers should take note of this and disregard those doomsayers who say that the dollar is going to collapse and gold is going through the roof anytime soon. It is argued by most economists that this tariff war is potentially very harmful to the US economy. And yet, there is a run to the US dollar causing it to rise. Why? Because it is still the world currency. And it is felt that in the case of crisis, other currencies will fall first and the US dollar will be the last standing. Now, eventually, even that will collapse too. But it's this intervening period that is so important. When the 2008 crash occurred, with stock markets collapsing some 45% globally, and property prices plummeting and bank credit drying up, the US dollar held up particularly well and at some stages strengthened, while even sterling fell almost 25% during that 12-month period. Gold markets also fell until their recovery and rise in 2009. And interestingly, gold actually fell the day that the S&P hit its intraday low. Now, this is important. If you were to ask us when is the best time to buy gold, especially if one believes that a stock market crash is on the horizon, we would say within a couple of days that the stock market crash occurs, as there will be a run towards the dollar and gold and silver prices will fall in response. Now, the one exception is if the cause of the stock market collapse is that for some reason there is a fall of the dollar. If that is what precipitates it, then the response will of course be different. Nevertheless, we cannot express strongly enough that all of the scaremongering on the dollar collapse is just that. Long term, we all believe that dollar prices will fall, but we are more likely to see other currencies fall first, and that will be the guide, i.e., the dollar's rapid rise in strength, in relative strength, before its inevitable fall. Now back to gold. Last week, gold performed slightly on the weaker side, heading towards that $1,200 level, which we believe it will reach over the summer. Dollar strength and the Fed's comments on interest rates, and more importantly its actions on interest rates, will be a considerable determining factor, certainly over the next 2 to 3 months. It's worth noting that the US Federal Reserve Chairman, Jerome Powell, said in an interview last week that he believed, quote, the economy's in a really good place, unquote, at the moment, with unemployment at the lowest point in nearly 2 decades, and inflation finally approaching the Fed's optimal goal of 2% annual increases. He added he was, quote, very pleased with the results, unquote, of the Fed's gradual pace of rate hikes. Silver again followed more or less gold's path last week, finding $16 a strong ceiling to penetrate, and is heading towards $15.50, which again we predict will be reached over the summer, and possibly getting close to $15. Now we could be wrong here in that we do not see silver necessarily falling below $15, unless perhaps it's a couple of cents. The reason being is that physical buyers see both $15.50 and most certainly the $15 level as excellent value for money, and one can clearly observe market entrants at these levels. We believe that the days of $13 silver are behind us, and $14 silver very unlikely. Equally, we do not see silver rising above $18 in 2018 at the top either. This coming week, the following reports, worth noting, are announced as follows. On Monday, retail sales for June. On Tuesday, industrial production for June. On Wednesday, June housing starts and the Fed chairman's testimony, which we recommend you pay close attention to. And on Thursday, leading economic indicators for June. So this week, we predict prices holding steady to slightly weaker, and politically are awaiting the inevitable indictment of Roger Stone, which we are certain is going to happen, but are just a little askew as to the timing. If you pardon the pun, we know that Mueller will leave no stone unturned. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also kindly visit our website at illuminatisilver.com, and if you haven't already done so, subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated regularly, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.